Well, thanks for staying with us on NSE closing bell. For now, the Nifty is holding. It's recovered from the lows of trade and is holding with a gain of about 40 odd points. But it's the mid-cap index where all the action is. So let's take it from there. Bharat Forge is a stock on our radar right now. It's up almost about 4.5%, and volumes have picked up on Bharat Forge. This is after the management, Baba Kalyani, told CNBC-TV18 at an event that there are large defense and railway orders that they're securing. And in fact, they've been given a contract to supply artillery guns to Europe for the first time ever. Now remember, Bharat Forge has been doing a lot of groundwork in the defense sector. They've been setting up the infrastructure and they've just been waiting for orders to come through. And now they've got a big order from Europe for artillery guns. So that's a big positive for them. Let's listen into what the management told us.
There are pockets of opportunities where things are happening at a much faster pace. I'll give you the example of railways. The railways are undergoing some tremendous modernization. Just day before yesterday or yesterday, a tender was out for 1,600 locomotives of 9,000 horsepower. Siemens was the lowest bidder, 20,000 crores. It is all supposed to be produced in India in an Indian plant. In one more week, there's a similar tender out for 9,000 horsepower locomotives, which is going to come out, and then 200 Vande Bharat trains, and then 100 high-speed trains. Now, this is the kind of initiative that Mr. Vaishnav has taken in his ministry to create industrialization of the railway manufacturing system, which was somehow embedded in the last century for many, many years. And overnight, this is going to get completely modernized. What took Europe and America 50 years to do, India will do in 10 years. The first time ever in India, a private sector company has been given a contract to supply artillery guns to Europe. Never happened. Till about 3 years ago, we were importing artillery guns in this country.
All right. Well, that's a very optimistic Baba Kalyani. But let's talk about the stock now. Deven Choksey is still with us. Deven, if you map the trajectory of Bharat Forge for the last, say 1.5 years, it was stuck in this range between 750 to 800. It just never went anywhere. But now, since news flow has come through of picking up orders in defense and railways, the stock has started to move. Is it a good opportunity for the long-term investor?
So, Sonia, the company has always been having high potential and probably, I think, have always demonstrated their ability to supply the emerging areas. Now, in this case, I think defense and railways both. Fortunately, and rightly observed, so I think the recent quarters, one is also experiencing the financial performance coming along with. At this point of time, I think the company is showing the signs of growing upwards of 20% in coming quarters and the years now. So that is where probably I think this should be seen as an opportunity. Maybe I think the market was waiting for the sustainability of the growth, which it looks like I think we'll have because of the higher amount of orders coming in from two key segments, the railway and the defense. And that should possibly support the argument for 20% plus kind of a growth. I would think that I think there is a case for holding this company, and any correction in the price, I think a case for buying as well. The current valuations are reasonable. I am not saying that it is cheap, but it is reasonable. One can argue that if it is going to grow upwards of 20-25%, certainly I think one could add into the portfolio given the current valuations.
Okay, all right. By the way, just keep an eye out on Vadilal. The stock is up for you on the screen. We need to understand actually this piece of news in further detail, because as of the exchanges, they are saying that the company has approved purchase of Vadilal brand from Vadilal International Private Limited. As of now, I think that entity is a promoter-held entity. So the brand has been purchased. We'll have to see what's the outlook from here on. They're also talking about some non-core assets. So for the time being, the stock is reacting positively, but I think we need to look into this in a little bit more detail. So keep an eye out on that one. But Deven, I wanted your view on the cement space. And, before that, just listening to JK Lakshmi Cement, the stock hit a fresh 52-week high today. It's nearly more than doubled from the lows that it hit in May this year. Earlier today, we caught up with Mr. Arun Shukla, the president and director of the company. He gave us an outlook in terms of volumes, profitability, and the direction for the company by FY25. Let's hear about it.
Now, coming to the volume growth, till last quarter, we have grown in double digit. Our growth has been around 15%, 15% plus. And when we are going to close this year, I suppose that we are going to grow at a higher rate, higher than the industry. And we suppose we are going to have a growth of volume at around 12-15%. Right now, we are at about close to 800 rupees per ton, right? And our plan is to take it to first milestone is to go to 1,000 level, and for that we do have plan. I told you that we are working on top line, and parallelly I think cost reduction in cost base, that is what is our focus area, along with the supply chain efficiency. So we are trying to reach to that 1,000 rupees level. Our plan is to achieve this in the coming maybe around 12 to 18 months time. I think that payout is going to be phased out, and in the interim will be paying our debt also, right? So probably I think peak date is going to be about 12 to 1,300 crore.
All right, Deven, that's the management sounding very, very confident. Actually, Mr. Shukla took over just a few months ago, but he's managed to turn things around. And the street seems to be, liking what he has been saying, talking about higher focus on trade sales, higher focus on premium sales, as well as higher focus on profitability. But the stock is no longer cheap. I remember forever the stock used to trade around $55, $60 per ton. It's trading at closer to around $100 per ton. Your view on the cement space and JK Lakshmi Cement, if at all?
So Nigel, I think we remain distinctly confident and positive about, I think, cement space in general, save and except some of the smaller companies in the southern pockets where they don't have the power to beat the cost as well as, I think, create the logistic advantage in their favor. But otherwise, the larger players like Ultratech, larger players like ACC and Ambuja, and I think some of the select pockets, I think also the players like Shree Cement and all, they remain, I think, distinctly positive players as far as I think the ability to produce higher amount of growth is concerned. Fortunately, with the infrastructure spending continuing in the economy, the demand side scenario remains intact, and on the contrary, I think it is promising to grow well. The last quarters have been, I think, slightly challenging because of the higher amount of input cost, but I believe that I think that is now under control. So hopefully in the third quarter, in the fourth quarter of the financial year, we should be seeing relatively better profit performance coming from the cement companies. We remain positive, and I think we like larger players like Ultratech and ICC Ambuja kind of players. We like them. Sheer volume ability that they would have to work in their favor going forward.
Okay, so prefer the larger cap cement name, but just look at the PSU bank stocks go. The Nifty PSU banking index is now up 3.7%. When we started the show, it was up 3%. J&K Bank, it's a mid-cap bank, but now for the week, it's up 32.5%. Karur Vysya Bank has spiked up. Indian Overseas Bank, IOB, is seeing buying interest for the week. That stock too is up close to about 9%. So there's no stopping the rally as of now as well. And things are just getting better and better for the PSU banks in terms of stock price gain. Even the other pocket of strength over the last couple of days has been fertilizer. So take a look at something like FACT. Up today, up 17% for the week. Madras Fert has rallied 20% for the week. What is the news that's driving these stocks higher? Is it just expectation that the Rabi sowing, that season is going to be strong and therefore demand will pick up? Or is there something else that the market is latching on to?
So my understanding, Rima, is I think the input costs coming under control. And as we all know, I think the petrochemical base input cost, I think, which requires to come under control. And that is what has started happening with the crude oil prices remaining under check. Given that kind of a situation, I think some of the users, I think, would be benefited out of this, and fertilizer being one of them. So I think that could be one of the reasons for which market remaining slightly excited. At the same time, ahead of budget months, I think you definitely see more actions in the likes of fertilizer stocks, likes of railway stocks, and I think that continues. But in my viewpoint, I think it is more of the cost pressure which they will be able to meet now. That is where possibly some amount of falling may start happening into fertilizer companies.
Okay, Deven, pleasure speaking with you. Thank you very much for joining in. Have a very good day. Vinay Jaising, the MD of Portfolio Management.